Welcome everyone to today's presentation with Robert Jones of Left Brain Professionals. We are here for part 2. We're going to talk about the incurred cost proposal, specifically other schedules, special issues, and templates. So we hope you were able to join us in March. In just a couple minutes here, I will post the link to part 1. So for those of you who maybe didn't have a chance to join for part 1, you can go ahead and get that link from the chat box and then you can catch up. But we're really glad that you're here today. We want to make the webinar interactive. We'll use the GoToWebinar questions pane to monitor your questions. In addition to Robert being on the line, we also have Jenny from Left Brain Professionals, and Jenny's also going to be monitoring the questions pane and helping out throughout the program today. So definitely we're here to help you get the most out of this presentation. The handouts are attached for you if you'd like to download them. We will launch 7 poll questions. Today's webinar is an hour and a half. That means 1.5 CPE credits. To earn those credits, you'll want to respond to a minimum of 6 of the 7 questions, but we love it when you answer all of them. We love knowing that you're tuned in and engaged, and it just helps us kind of keep a pulse on how we're doing and how things are going in the audience. So there's that, and you can get your CPE certificate from your Incourse dashboard an hour after the program concludes. And if you have any questions about the webinar, CPE, handouts, etc., you can always reach us at support@incourse.com. Well, it's my pleasure to welcome back Robert Jones. Robert is the founder of Left Brain Professionals. He is a government contracts and accounting expert. As you can see here from his professional background, he has obtained education in this space. He's been a business manager. He's worked in compliance. He's worked in operations. He's been a controller, a defense contracts manager. Robert, I'm not sure exactly what role you haven't done, but we definitely really appreciate partnering with you as an instructor and a speaker. I know that you have worked on a book, and also you're working on planning an awesome conference. So just really a high energy, passionate instructor and professional in the government contract accounting space. So Robert, thank you for being here today. I'll turn things over to you.
All right, well, good morning and good afternoon. Thank you everyone for joining us again here for part 2. Excuse me, as we start the presentation, I do want to just take a couple of moments again and lay the foundation of what we're talking about and what we're covering specifically in this session and what we covered last month. So for those of you that have been with us for a little while, you've probably heard me talk about the incurred cost proposal before. In fact, in December, we did a high-level overview of the incurred cost proposal, and then we decided that we wanted to do a 2-part in-depth schedule by schedule approach. We wanted this to really be, we wanted you to see each of the screens, everything that you need to know about the incurred cost proposal. So last month was part 1, and Liz said that she's going to drop the link in there for information about that. If you missed it, you can go back and pick that up. So if you just happen to be joining us today and you missed part 1, you're going to get to the end and think, well, wow, he didn't cover some of that information. It's because I already covered it last month. And so, you know, the part 1 is where we talked about the general ledger schedules and job schedules. This month, today, we're going to be talking about some of the other schedules, some very specific issues and dealing with templates. In both sessions, there's information on the supporting documents that you'll need in order to prepare the incurred cost proposal. And there's also some tips and tricks information in both presentations. And then the last thing that I would say as we dive into this, you know, and I think it's kind of timely that it's also happening during tax season. You know, my challenge to government contractors out there is how many of you actually prepare your own taxes? Very, very few, if any, right? You, and I can tell you as a business owner myself and as a licensed CPA, I actually turn my taxes over to somebody else. As a business owner, our taxes have become more complex as our business has grown. We have employees in multiple states. We deliver our services in multiple states, which has triggered nexus issues for us. So it's a very taxes are very complex. There's a lot of schedules, there's a lot of nuances in there. And if you don't do those kinds of things every day, if you don't keep up with it, it's very, very easy to get in trouble, right? You miss a form, you miss something, and all of a sudden you start getting what I call the nasty grams, either from the IRS or from the state people. The incurred cost proposal in many ways is very similar, right? There's a lot of schedules in here. There's a lot of information that goes into it. And quite frankly, if you don't complete these on a regular basis, if it's not something that you're really an expert at doing, there's a really good chance that you're missing something, and that something could be, something that is either costing you money, or it could be something that comes up in an audit of your incurred cost proposal later. And then those findings in an audit can either cost you money, penalties, fines, and certainly just the headache and hassle of dealing with the issue during the audit. So I really challenge you to think about that. And in fact, one of our opening poll questions here is to gauge exactly that. A quick intro for us, for those of you who maybe are new or not familiar. Again, my name is Robert Jones. The firm is Left Brain Professionals. We are a boutique accounting firm, and I use that term for a couple of reasons. The first is that we work only with government contractors. I like to tell people that we live, eat, and breathe the FAR and the cost accounting standards. And the other thing that makes us boutique is what we do and what we don't do. So we practice primarily accounting system design, implementation, and audit support. And the part that we don't do is we don't do any taxation or attestation ourselves. Again, those are tasks that are better left to somebody else who practices those on a regular basis. A lot of work we do with clients is around indirect rates, strategic pricing, obtaining an adequate or an approved accounting system. And then for us, for those of you who do tax, right, you guys are hopefully ending your busy tax season. And for those of us in government contracting, we're heading into our busy season with incurred cost proposals that are due June 30th of this year. Liz did mention our summit. I'll talk a little more about that at the end of today's presentation. Hopefully you'll join us, and when you do, you'll have an opportunity to meet Steve and Melissa, who you see here on the screen. They will actually be doing a presentation at our summit in July. All right, our learning objectives for today. At the end of our roughly 90 minutes together, you should be able to explain the importance of comparative analysis, list 3 common issues with labor reconciliation, describe the proper treatment of adjustments to the general ledger, and list 4 best practices when working with templates. Jenny, if you'll kick off our first polling question, please.
Our first polling question today. Do you hire someone to help you with your incurred cost proposal? A, we do it all in-house. B, we prepare it but have an external review. C, we prepare it in conjunction with an external party. Or D, someone else prepares it and we review it. Give everybody just another second on that polling question. Okay, I'm gonna go ahead and close this out and share the results.
All right, and there's obviously no right or wrong answer here. It's kind of interesting that we're about 50-50 split almost of those of you who do it all in-house and those of you who involve someone else at some level. So good information to know. All right, let's dive right into our content. I've got a lot of info, as always, when we do these webinars. Our first section here is around the other schedules. Again, reminder that last month we did the general ledger schedules and the job schedules. So last month we covered schedules A, B, C, fringe. We also did G, H, and I last month, I believe. So this month, starting off with Schedule J for the subcontract information. This is where we tell people that you need to have a tool to track the subcontracts you issue. So that tool can be one of a few things. It can be as simple as an Excel spreadsheet. I will say not the best approach, but it works. It can help keep you organized. If you're a relatively small company, maybe you have a relatively few number of subcontracts that you administer, an Excel spreadsheet might be sufficient for you. And again, simple, easy, almost free solution. as you're growing and you're taking on more and you're issuing more subcontracts, I should say, consider something like a database. Access seems a bit outdated in a way, but it is still there. There are other database tools. Have somebody actually build you a database. And one of the reasons that I say kind of convert from Excel to a database is that then the database gives you more searching and reporting functionality. You can build some other tables in there and you can do some other good stuff. And then from there, you would progress into a software that's actually designed for contract management. So you want something that, and there are a number of software programs out there on the market. The one thing that I would tell you is when you're looking for those contract management tools, as a government contractor, make sure that your search includes something for contract management for government contractors. And again, that's key because obviously in the government contracting space, there are some other nuances that we need to be aware of and some other things that we need to capture that those in the commercial contracting space may not be dealing with. So what you will get when you're looking at the Schedule J, and if you remember back to Schedule H last month, you remember that Schedule H is your job cost ledger, and you have to break out that information by contract type. So you'll see a very similar thing here for Schedule J for the subcontracts that you administer. You do need to capture this basic kind of information and report it on a contract type basis. That's where, again, it could be solved with an Excel spreadsheet, but whether you're using an Access tool or some other software, you want to be able to capture all of those pertinent details of a subcontract. And honestly, it's mostly the same information that you would track for the contracts that have been issued to you. So that contract management software, and I will say a good contract management software will not only allow you to manage the contracts that are coming into you as an organization, but also the subcontracts that are going out, right? So you as an organization are in the middle, you got your clients who are issuing you contracts, and then you're issuing subcontracts to your vendors. So you need to be able to manage that flow of information both ways. And for both of them, most of that information is the same or very similar. Our other schedules, the next one is Schedule K. This is for T&M or time and materials, hours and dollars. Note here that your data is going to come from your timekeeping and or your invoicing or accounting system. And it should match, right? That's going to be one of the things that auditors are going to look for. You go through an audit, they're going to ask for backup information, and they're going to say, one things that they can test is, and actually I'm going to back up it a little more when we talk about timekeeping for the government. When it comes to transactional analysis during any kind of audit that involves timekeeping or labor, auditors are going to look for some very specific things. One, they're going to say, okay, here's the invoice that you submitted with hours on it by labor category. They're going to say, show me, and they're going to, right, it's going to be random sampling, but they're going to pick some, they're going to say, okay, now show me the people who charged these labor categories on this invoice and prove to me that they meet the qualifications to actually charge that particular labor category. Then they're going to want to see timesheets. They're going to say, show me the timesheets that back up the time that was on your invoice, right? So if you invoiced me for the time, then you should have a timesheet that matches that. Then they want to look at payroll records. They're going to say, okay, if you invoiced me and you have a timesheet that matches it, prove to me that you paid the employee, right? That you didn't fabricate this so that the employee has been paid. And then they take it a step further, and we'll talk a little more about this when we get to Schedule L in today's presentation. Then they say, now show me your payroll tax returns and prove to me that you paid taxes on the same labor dollars that you are reporting as claimed costs in your incurred cost proposal. So you can see that's a multi-point reconciliation when it comes to, again, timekeeping and labor. You will need hours and dollars by labor category by contract, okay? So again, hours and dollars by labor category by contract. And here's an example of what the schedule looks like. Again, for those of you, maybe this is your first time with us, the schedule that I'm showing you is from our version of the incurred cost proposal template. The template is available on our website. If you go to leftbrainpro.com, in the top menu, you'll see a tools button. If you click on that, then you'll find the incurred cost proposal as an option. It's a free download. Again, it is a template. I'll talk more about templates at the end, but if you're wondering why this might look a little different than the DCAA version of the template, that's why we started with theirs and cleaned it up and made some tweaks to it ourselves. All right, Jenny, our second polling question, please.
Our next polling question. On Schedule K, data comes from timekeeping and A, employer taxes, B, invoicing, C, healthcare, or D, retirement. Just a few more seconds on this question. Okay, I'm gonna go ahead and close this out.
All right, on Schedule K, where does the data come from? Timekeeping and what? The answer is B, Bravo, invoicing. So I see a fair number of you got a little confused with the employer taxes. I said that was one of the overall points that auditors are going to look at to validate, but the actual data for completing Schedule K comes from timekeeping and invoicing, right? Remember, we need the hours and the dollars. So timekeeping is not going to have the dollars. We're going to pull that from the invoicing side of the house. All right, carrying on with our content here. Schedule L, so this is for labor, and I'm going to spend a few minutes talking about Schedule L. So as I say here on the slides, this should be easy, but I find that it's one of the most difficult schedules to reconcile. Not necessarily one of the most difficult ones to prepare, because if you remember back to Schedule H as an example, there's a lot of information that goes on Schedule H. There's a lot of information that goes on Schedule K, the one that we just talked about. If you happen to have a bunch of T&M contracts and you have multiple labor categories, completing that schedule can be difficult. Schedule L I find to be difficult to reconcile because of some of what we just talked about with the labor accounts and payroll tax stuff. So what are the reasons that Schedule L becomes difficult to reconcile? The first is that we find that W-2 labor counts are not easily identified. That simply means that we come across people that the description, in your general ledger, so we run a trial balance and we're looking at those descriptions trying to identify the labor accounts. Sometimes those descriptions are not clear. For example, and I'll just talk specifically about direct labor at the moment. If you have, and you would have direct labor of some sort, whether you're providing a product or service, you've got direct labor. That direct labor account should be your W-2 employees, okay? If you have temporary labor that you might be getting from somebody like a Robert Half or a Kelly Services or some other temporary firm, that needs to be a separate account, right? Because, and there are different reasons for that. One is these are not your employees. So when it comes to calculating fringe, we need to make sure that our W-2 labor is segregated from our temporary labor and from our subcontractor labor. Again, you should have, if you've got all three of those types of labor, then you should have a direct labor account, a temporary labor account, and a subcontractor labor account, right? Break that stuff out because the reporting and the calculations are very, very critical around that. We also find that W-2 labor is sometimes commingled, well, what I just said, it's commingled with the other labor, right? That the accounts aren't identified. And so when we start pulling reports, we start seeing that things don't jive. And then we discover, oh, well, we had temporary labor and other stuff that was, posted in here. Don't do that. Okay, make sure we keep that stuff separated. We find that sometimes W-2 labor is commingled with other expenses. A common area that I've come across this in the past is with training. So training is typically an overhead expense. And somewhere along the way, somebody will usually say, hey, wait, we're sending these people to training. I want to know the full cost of training, right? So it's not just the cost of the class itself, but there's travel to get the person there. It's the hours that they're there. I want to see all that training cost. And invariably what will happen is somebody will start putting all of those costs into one account and they'll just call it training expense. Well, the problem there, particularly with the labor, is now, right, all of that is commingled into one account, and sometimes trying to extract that data becomes difficult. At the very least, right, we got to go back and sort through journal entries and a bunch of other stuff in order to get the information out. Becomes very, very difficult. And just a reminder with that, back to the very first presentation we did last year in January of 2020 when we did our laying the foundation, we talked about having homogeneous accounts, right? And homogeneous means that there's only one type of expense in that account. So whatever that account is, if it's a travel account, then it needs to be a travel expenses only. If it's a training account, then to me, that is the actual cost of the training class. Now, if you wanted to, have multiple other accounts in order to track stuff, that's fine. Just be careful in how you are potentially combining accounts. Other things that become problematic, back to Schedule L for the reconciliation, is that people do adjusting journal entries instead of fixing timesheets or labor distribution. I can't tell you how many times from a process perspective when we're working with clients, we learn that there are issues in the process and somebody says in accounting, oh, we just do journal entries to fix payroll, right? We know what the problem is. We know how to fix it. So we just do a journal entry to fix payroll. And I'm like, but there's a problem in timekeeping, right? Which means it's flowing through to your labor distribution process, which means it's flowing through to your general ledger. So by doing a journal entry just to fix it in the general ledger, right, and to fix payroll is not fixing the source of the problem. So you've got a couple of things. One, we may not be providing adequate feedback to the people who are causing the problems and training them. But the other is that now my source documents, right, my timekeeping reports are not going to match the general ledger and match the payroll reports. And that again becomes a problem during an audit, because we know auditors are going to ask for all those things. They're going to say, well, wait a minute, we got these discrepancies here, what's going on, right? And I can tell you that responding to the auditor by saying, well, we just fix it in payroll is not going to be an appropriate response. And then, again, sometimes there are other significant payroll adjustments that are not reflected in the GL. We find that sometimes people actually fix things on the payroll side, right? When they're processing payroll, and again, some of those corrections are not properly carried back to the general ledger. And then incorrect payroll tax forms. This is always an interesting one for me. And I caution people that just because you outsource your payroll, and even if you're using one of the big name, well-known providers out there, let me tell you, I have found errors in all of their reports at some point or another. I'm not saying that all their reports are wrong. I'm just saying that at certain times when we've been working with clients and we're reconciling timekeeping payroll stuff, maybe working on the incurred cost proposal, we have found when we go through the payroll tax reports that there are errors. I can't tell you why. You would think that if you're outsourcing, right, to somebody who's a payroll provider, that they know what they're doing and they get the report right. And I'm simply telling you that sometimes that is not the case. So make sure that you're double checking your payroll tax forms yourself, because you're going to have to reconcile those again here for Schedule L. So here's an example of what Schedule L looks like. The top half of the screen where you kind of see those peach or orange colored boxes, that's where you need the dollars for your W-2 labor accounts. So you see, for example, there that I've got direct labor, G&A labor. In this template that we have, it's built for 3 overhead pools. So you see overhead labor 1, 2, and 3. If you have BMP and IRAD labor, they're also in here, right? Because that's W-2 labor as well. Now, and the other one that's a little tricky is the paid absences from fringe. Remember that paid absences are W-2 labor, right? So we have to make sure that we account for the paid absences that are part of the fringe pool. The bottom half of the form is where you reconcile to your 940, 941. You know, if whatever your top level gross labor was that was reported in the GL should be line 1 of your 941s, right? Gross labor. Now, I will say there are times, and this is where things do get a little tricky. If you happen to have third-party sick pay, that's one of the things that will cause a little bit of an issue for reconciling the payroll tax returns. But there is an option down here, right? So there's other adjustments, right? So if you have something like third-party sick pay, and that's where you have short or long-term disability that's paid by the insurance company, but it's reported on the employee's W-2, but obviously because it's paid by somebody else, it's not in your general ledger. That is one of those reconciliation items that you would want to list out here. And it's okay to have those, right? The whole point of this is to reconcile and be able to say, here's the difference and here's why we have that difference. Continuing on, Schedule M is for the decisions, agreements, and changes in the organization. This is where you need to report significant changes in leadership, the organizational structure, right? Keep in mind that if we get new leaders in the organization, what happens, right? They may have new directives, they have new ideas about how they want to handle stuff. And that's one of the reasons that DCAA and other auditors want to know what's going on in your organization, because, right, that could be an indicator that, you know, changes are coming or something has changed and they want to be aware of that. An organizational structure could, you know, change in organizational structure could mean, hey, we're going from 1 overhead to 2 overheads, or from 1 overhead to 3 overheads, or we're, you know, we've broken out our department structure, and now maybe we previously had 3 overheads, but we're realigning some of those departments to different overhead pools now. Obviously, those kinds of changes are going to have an impact on the rates. And when we talk about that year-over-year analysis here in a little bit, right, that can be one of the things that explains why there was an adjustment or a shift in rates over time. Other changes to policies or procedures. Again, that can affect the treatment of a cost, which I'll mention here in a moment. Did you change any accounting software or apps? It's one of the questions I always like to ask people. People sometimes, especially when we talk about having an adequate accounting system, potential clients will say, yes, we had a, you know, we did the audit a few years ago, we have an adequate system, and you know, that was all done and approved. And I say, great. And they, you know, and I say, well, when was it? And they say, well, 7 years ago. And I'm like, wow, that's been a while. Like, has anything changed in your business in 7 years? Oh, no, we haven't had any changes. And then I say, okay, well, what about your accounting software? Did you do any upgrades? Well, yeah, we got all the upgrades. With those upgrades, did you get new features or functionality? Yeah, we got those. Are you using that? Yep, we sure are. Well, now you can see that there's a change, right, into your accounting system. Those kinds of things need to change. Those things need to be reported. Again, apps is a big thing, right? Timekeeping, expense reporting are a couple of big ones from an accounting perspective. But if you change those out, you need to report that, right? Because again, the auditors want to know what's happening in the system and how those changes could be affecting the data that's coming in. Maybe you change the treatment of a cost. Maybe you had a cost that at some point in the past, somebody said, you know what, this is a direct cost and that's the way we're going to treat it. And now, you know, maybe a few years later, you've gone back and revisited and we say, no, that's really not a direct cost. It's always been problematic. It really should be an indirect cost and we're going to treat it as an indirect cost going forward. You may have heard me say in the past that we need consistency in the treatment of cost, and that's true. Now, you know, in the case that you're making a wholesale change in how you're treating the cost, that's fine. We just can't flip-flop back and forth all the time. But you might say again, hey, we previously treated this cost one way, now we're treating it a different way. When you have the Schedule M, you will want to provide copies of the documents or a reference to where that information is found, right? So if it's a change in policies, procedures, if there, for example, has been an update to the accounting system, an update to the treatment of costs. All of those things need to be referenced in here. Our next schedule is Schedule N. This is the certification that all of the information in the incurred cost proposal, right, is true and accurate to the best of your knowledge. This does need to be signed by an owner or an otherwise C-level executive of the organization. Pretty simple, straightforward. You'll submit an Excel file of your incurred cost proposal to the auditors or to your cognizant agency. Obviously, you'll want to print this out. Either have the person apply a wet signature and scan it. You can convert it to PDF, put a digital signature on it, but obviously you'll kind of pull this out and provide it separately. With that, Jenny, our next polling question, please.
This is our third polling question today. Which is one of the most difficult schedules to reconcile? A, Schedule J, subcontract information. B, Schedule K, T&M, hours and dollars. C, Schedule L, labor reconciliation. Or D, Schedule M, decisions, agreements, and changes. About 10 more seconds on this question. I'm going to go ahead and close this out.
All right, and the correct answer here, again, when we were talking about the one that was the more difficult to reconcile, that was Schedule L, labor reconciliation, which is C, Charlie. All right, our next schedule is Schedule O. This is the contract closing info. So this is where you need to report contracts that are physically complete and that are ready to be closed out. So this is an area that we find a lot of contractors, even some of the very, very large government contractors, struggle. I did a project actually with one of the top tier defense contractors a couple of years ago. And actually I've done that with a couple of the big guys out there. And we discovered that contract closing, one of these contractors, I think, had something like 1,200 contracts that hadn't been closed, and some of them were going back like 10, 12 years. So they had a huge list. It finally came up in an audit. They ended up taking an internal person and putting them full-time. Their full-time job was just closing out these contracts. So remember that just because you physically complete the contract, meaning you've provided all the products or services, maybe you've even submitted your final invoice, there is still a contract closeout function that needs to occur, and that happens between both you and your contracting officer. But here the schedule is, what was the period of performance? Is it ready to close? And again, some other information. Supplemental schedules A1 through A4. This is where we get into the comparative analysis, and we've got 4 different versions that we'll talk about here. What I want to tell you is a couple of things. Notice that this says optional. So this is an optional schedule when you prepare it and submit it to your cognizant agency. However, when you go through, I should say, if and when you go through an audit, and obviously not every year of your incurred cost proposal will be audited unless you're one of the big contractors out there. But there are random audits that occur. There's risk level audits that occur. So at some point, you're going to go through an incurred cost proposal. When you go through an incurred cost proposal, even though this is optional when you submit, the auditors are going to come back and ask for the information. I also tell people that it's really good for you to go ahead and complete this. And for the same reasons, honestly, that the auditors are going to look at it. They want to see a year-over-year analysis of rates, right? The government is looking for those trends or changes from a previous year. They want to see, our rate steady. And not only are they going to look just at last year's, right, but when they're doing your incurred cost audit, they're going to pull the last few years of your incurred cost proposals, and they want to see like what's been going on with your rates. Are they relatively steady? Have there been significant changes? Have those changes been explained, right? Do we know why those rates, one particular rate has gone up or gone down significantly over time. Note as we go through schedule or supplementals A1 through A4 that fringe is not addressed. I include a comparative analysis of fringe at the bottom of A1 under my overhead. Again, it's great information. One of the other things, not only does it provide you year-over-year analysis, but it's also just a good check, right? It's a good sanity check for yourself to say, okay, here are the accounts that I reported last year, because that's part of what you have to do is you have to report stuff account by account, year by year. So what's nice is, and you got to be careful, some of your reporting tools, if you don't pay attention, there'll be like a little checkbox and it'll say, export $0 lines. And maybe you don't check that. So everything that you export is you're only getting general ledger accounts that have an amount in them. Okay, so if you did that last year, and maybe an account last year had a $0, so it didn't show up in your list. In this year, that account did have something in it. Well, now when I put those side by side, it might look like there's something wrong, right? Oh, wait a minute, why didn't I report this account last year? So that's one of the other good reasons to do it. It's just a good sanity check to make sure we haven't missed reporting any particular accounts. Couple of screenshots here. This is going to look very similar to the schedules B, C, and fringe that we talked about last month, right? So we're going to have our account number, our description. Our current year amount is going to pull automatically, and then we do need to key in the prior year. This is where I use one of my tricks that I talked about from Excel last month, where what I do is I copy paste the information from the prior year. I put it over to the side on the same tab. I turn it into a table, and then I use my XLOOKUP functionality to compare account numbers and pull in last year's dollars. And then I always double check that the dollars I pulled in and reported here from a claimed total match my claimed total from last year, right? I want to make sure that I pulled all that in correctly. My next schedule is supplemental A2. This is a comparative analysis of G&A. Remember that your the G&A pool does include B&P and IRAD. Reminder that B&P is bids and proposals and IRAD is internal research and development. These are reported as part of the G&A pool, but they are captured in separate projects and they are treated as if they were direct, meaning that they do bear their fair portion of overhead. That's one of the little quirks with B&P and IRAD. Again, we know that's an area that many companies get the calculations wrong in the calculation for G&A pool and the G&A base. Auditors know that, and they will look to make sure that you have calculated that properly. Again, the table here looks very similar. One thing that I forgot to point out on the previous slide is that this does show the dollar change year over year, as well as the percentage change year over year. The bottom half, so I kind of had to break this one into a couple of slides. The bottom half of that schedule, you'll see this is where we do have the B&P and IRAD information. You'll notice again that we have applied fringe in here. We have the applied overhead. That applied overhead to IRAD and to B&P, again, is one of the unique treatments of those two costs. Jenny, another poll-in question, please.
Our fourth polling question today: what does G&A include? A, B&P, B, IRAD, C, B&P and IRAD, or D, none of the above? A few more seconds on this question. I'm going to go ahead and close this out now.
All right, and the correct answer here is C, Charlie. G&A does include both B&P and IRAD. All right, continuing on with, again, we were in the middle of our supplemental schedules. The next is for a comparative analysis of facilities capital cost of money. Quick reminder just about capital cost of money. So interest expense is an unallowable cost for government contractors. Government is not going to reimburse you if you borrow money to buy a building or buy equipment. That said, the government does recognize that contractors tie up capital, right, in order to perform government contracts, whether that's borrowed capital, whether it's internal working capital, maybe it could be in capital and investment through the sale of, stock. There are different ways, obviously, that we get cash and capital into the business. Regardless, the government does recognize that capital does get tied up. And so they do provide for what I refer to as an interest-like or a quasi-interest expense. It's called the cost of money. There's a unique calculation for it, a whole separate conversation. We do have a cost of money calculator template on our website, again, and it is a template. If you have questions about that or you need help with the template, please contact us. I don't include that information or the supplemental, I shouldn't say I don't include the analysis of the cost of money in the incurred cost proposal, simply because most of our clients do not claim or they don't do any of the cost of money stuff. The last thing that I would remind you is that in order to claim cost of money, it must be proposed, must be in the contract at award. Then you can claim it on the incurred cost proposal. And that means that, it's also on a contract by contract basis. If you do not, hear me again as I say this, if you do not propose it, you cannot get to the end of the year and say, hey, wait a minute, we had $1 million of capital tied up on this contract. Why don't we go ahead and calculate, cost of money and claim that now? Nope. It's got to be in the proposal, got to be in the contract award. Okay, that is one of the key things about the cost of money. Supplemental A4 is the comparative analysis of direct costs. Again, the government just wants to see, what's happening in your rates. And remember that direct costs have a significant impact on fringe, overhead, and G&A, right? Because direct costs are in the base of all those pools, and particularly for 2020 and continuing into 2021, those contractors that were impacted by COVID-19, and likely had some lost or delayed contracts and other things that affected their rates, that's going to be something that's going to pop out. Like if I look at 2019 versus 2020, it's very likely for some of the contractors on this call, we're going to see a significant shift in dollars, right, because of those issues with COVID-19. Supplemental B is contractor general information. Quick note here that when you see the request for compensation data for the 5 highest compensated employees, okay, and this means employees whether or not they are an executive or a manager. In the past, people often said, well, we need the 5 highest compensated executives. No, this is the 5 highest compensated employees. And for many small businesses out there, the 5 highest compensated employees very well and very often we discover might be like an owner, right? Obviously kind of makes sense. Might be an owner, might be a manager, and then might be 3 engineers who are not owners and who are not managers. Not an uncommon situation. So again, just that clarity that this is for the 5 highest compensated employees. You'll see that that you need to provide your NICS code, some sales information. Remember, overall, the incurred cost proposal, and when we talk about indirect rates, we're only talking about costs. We never talk about revenue. But here, the government does want to see the split in your sales between government and other. And they also want to see the number of employees that you have. For your compensation, you'll see below that, they want to know how you determined that those compensation rates that you're paying are fair and reasonable. What were the sources of your data to validate that? So you'll see some options down there to select. Supplemental C is the ID or the identification of prime contracts. This ties back to what we were talking about with Schedule J and subcontracts when I was talking about having a contract management. Really, it's a contract lifecycle management. A CLM is the tool that you'll want. This is where that data from the well-organized contract management tool comes into play. You need your job number, right? What is your internal job number? What was the contract number? And when you're the sub, what was the contract number that was given to you by the prime? What is the prime contract number? Regardless of whether you're the first tier prime or a third tier prime, what's the top level prime contract number? What type of subcontract was issued to you? A lot of information in here. And again, this is the kind of stuff that if you have a good tool, whether it's an Excel spreadsheet, an Access database, or a paid actual software program, when you get each contract, and this is going to be my other thing, we'll talk about the contract briefs here in a moment. When you get each contract and when you issue each subcontract, take the time to record the information. It's much easier to spend a few minutes gathering that information while the contract is in front of you and while the information is fresh. We have worked with a number of clients over the years where what ends up happening when we do the incurred cost proposal is that sometime in May or June, they're uploading a bunch of PDF files of contracts, and we now have to dig through those and find all of that information in order to populate the incurred cost proposal. It's much more difficult and time consuming for us, or even time consuming for you if you're doing it yourself. Much easier, again, part of your daily, weekly process as you receive a new contract, you're setting it up in the accounting system, you're creating charge codes. Open up your tool and make sure you capture these pieces of information. So when you get to the end of the year, it's easy then to create a report and export it so we can get that information into the incurred cost proposal. Supplemental O is your contract briefs. Again, that's where you're going to pull the similar data, but at a more detailed level on a contract by contract, modification by modification basis. You'll notice that our approach here in our template is to use a table. We find that the one tab per contract brief approach that's in the DCA template, it's clunky. And when you have, we have clients, I should say, that sometimes have tens, even hundreds of contracts and modifications throughout the year. That's a lot of tabs to create. You can create a table. You still have the only requirement, right, in the incurred cost proposal is that we're providing the data. I don't necessarily have to provide it to them in the same format that they've given it. I just have to give them the data. I argue that this way is actually better because, again, it's all on one tab, and because it's in a table, it's very easy for me to sort and filter and be able to find the information, that if I'm looking for a specific piece of information, much easier to find it this way than it is to have, we did an incurred cost proposal last year. I think they had 80 contracts. If we had 80 tabs and we were looking for something, much more difficult to find that piece of information. Jenny, a polling question, please.
This is our 5th polling question today. Compensation data is for the 2 highest compensated employees, A, true, and B, false. And Robert, while everybody's answering that polling question, we actually have 2 questions that came in. The first one is, does IRAD stand for internal or independent R&D? And what does B and P mean?
When I say IRAD, I refer to internal. I guess you could use the term independent. It's really, what I clarify there is this is your research that you're doing as a company for your own products and services, right? So you could be trying to improve upon an existing product. You may be trying to develop a new product, but it's that internal research and development. This is not paid R&D as part of a contract. And then B&P is bids and proposals. And what I clarify there is that bids and proposals is the actual pen to paper. I stole that phrase from a colleague of mine a few years ago, but I think it's very clear and helpful in describing it. B&P is the actual pen to paper responding to an RFP. So B&P is not business development, it's not trade shows, it's not knocking on doors. It's the actual, we have an RFP, we are now putting together our proposal in response to that.
Great, thank you. I'm going to go ahead and close out this polling question now.
All right, and the answer here was false. Remember that the compensation data we talked about on Schedule N was, or I'm sorry, the data that we've talked about was for the 5 highest compensated employees, 5. So the answer would be B, Bravo, false. All right, let's now talk about some of the supporting documents. So again, last month in session 1, we talked about the supporting documents that would be necessary for those schedules. And we have another list for you this month. Your contract and subcontract details, including mods. This is where that software tool, Access Database or something is going to come in handy to be able to extract the data. Timekeeping and invoicing details that we talked about when we were talking about Schedule K. Remember that if all of your timekeeping data says we billed, we collected time for this labor category against these projects, and that should be what matches on the invoice. Obviously, the other piece that's going to come through from the invoicing side is the rate that you charged. So on that schedule, you're going to have a list of labor categories in the first column down the left. You have contracts going in individual columns across the top. And then underneath of that in your matrix, you're going to report hours and the rate with total dollars billed for that labor category by contract, right? And you're going to do that across the board. You're going to need your 941, 940, and W3. While the W3 is not necessarily a requirement that's listed when you're preparing the incurred cost proposal, and again, this ties back to Schedule L. I like pulling into the W3 because it's another way for me to validate stuff. Again, this is where I have found that there have been issues in the way something was reported by the payroll processor, right? So we find that there are discrepancies among the 940, 941, W3, and the payroll summary. That's one of the other things I tell people is get a copy of your year-end payroll summary, because we can use that to help try to find issues, right? Because we're going to have your general ledger data. We're going to have these 940, 941. We've got a W3 that we're looking at. Now we've got the payroll summary. It's a little bit of an exercise, but if all of those things reconcile, then it's going to make your audit of the incurred cost proposal much, much easier. As well, you'll want all your payroll journal entries. Hopefully when you're entering payroll journal entries, you actually have, a code or something that you're indicating. A lot of general ledger systems allow you to create different types of codes or indicators on a journal entry so that it's easier to identify what the purpose of that journal entry was. And hopefully you've got an easy way to export all of your payroll journal entries, right? And you might say, well, we'll just run a report against all the payroll related accounts. Well, what if somebody mistyped something, right? So what if somebody entered a payroll journal entry, but they entered the wrong account as an example? Well, then that could cause a problem. And if you only pull stuff from the account side and not from the journal entry side, then we might be, that might be where an issue is in the reconciliation. So if you can pull all of your payroll journal entries, and there are legitimate reasons. While earlier I was saying that we need to avoid doing journal entries from a payroll perspective. Obviously, one of the main reasons we do journal entries is to accrue payroll at the end of the month, right? We have a payroll expense, right, that's due in that month, even though we don't pay it until the following month. Those are legitimate journal entries, and that's okay, but we still want a copy of those so that we can validate, at the end of the year. And I should have gone back to say as well, on the Schedule L, you're going to have variances, right? And at the very least, one of those variances between payroll and labor that's reported in the general ledger is that you're going to have a labor expense for those last few days in the year, because, right, the payroll periods, unless you're a monthly or a semi-monthly payer, if you're a weekly or a bi-weekly, you've got anywhere from a few days to maybe 10 days in a pay period that overlaps the end of the month or overlaps the end of the year. So we always have to be cognizant of those items. Again, you want a list of all the documents supporting any changes to the organization, leadership, accounting system, software, apps, policies, procedures, treatment of costs, all those kinds of things. And then you'll want a copy of your prior year ICPs. It's going to be helpful for you in preparing them. It's going to come up in an audit. If you've got somebody external, I can tell you right now, if you call us and say, hey, Robert, we'd love to have you help us prepare our ICPs, great. One of the first things that we're going to ask for is we need to see last year. And in fact, I'd like to see a couple of years of your ICPs. And think back to the tax conversation we had at the beginning of today's webinar. Same thing, right? If you go to a new tax CPA, what's one of the things they ask for? We want your prior tax return so that we can see what was going on. We want to see how taxes, how certain costs were treated, for a couple of reasons. One, we want to make sure that we've got consistent treatment of costs, or in the process of that, we find that, hey, something was wrong and needs to be corrected, right? And we find that sometimes with incurred cost proposals, when we look at somebody's from last year, if it was prepared by somebody else, we might find that there was an improper treatment of a cost or reporting of a cost, and it's much better to file an amendment and get that in, just like it is, right, from a tax perspective, file an amendment and get that in there, than it is for the auditors to find it, right? Because if you go through an audit and they start finding problems, and guess what? They're going to start digging more and open up more years potentially for your audit, and that's going to get ugly. All right, let's talk about some of the special issues when we're dealing with the incurred cost proposal. The first is unallowable costs, and we did a full webinar last year on unallowable costs. So go back and pick that up if you missed it. Again, unallowable costs are those costs that the government says that you don't need to incur in order to do business with the government. They may usually are otherwise, legitimate business expenses. They may or may not be tax deductible, a separate conversation. But we do have to report them appropriately in the incurred cost proposal. We have to identify those and segregate them. So even if you, and hopefully you have separate GL accounts for your unallowable costs, that's always our recommendation. But obviously that's going to be listed on your general ledger, so we have to adjust them out and show that we have treated them appropriately in the calculation of the indirect rates. If you received any COVID-19 relief, and again, we did a whole webinar, I think in February of this year on PPP forgiveness and COVID-19. So whether that was PPP forgiveness, the Section 3610 funds, employee retention credit, the emergency paid sick leave credits that are out there, any of those that you participated in. And remember that I think all of those had some extension into 2021, right? So depending on what your fiscal year is, whether that's a calendar year, whether you're on a different fiscal year, it's very likely that many of you who participated in any of this, you're going to have issues in whatever your fiscal year 20 is and your fiscal year 21, right? So make sure that you have all the proper reporting and information because when you prepare the incurred cost proposal, we already know, and let me spend a couple of minutes talking about this. I had a conversation with a DCA auditor, actually somebody in policy, last week, and we were talking about this. I've had conversations with clients and potential clients. In fact, we had a potential client that I'll say at least so far has chosen not to go with us, and it's really nothing to do with our capabilities. I can tell from the conversation that they simply didn't like the information that I provided to them. And the gist of the story is that we were having a conversation and we were learning about them, and I asked if they had participated in any of the COVID-19 last year, and they said yes. They got a fairly sizable, I don't remember the exact amount, but it was a fairly sizable hundreds of thousands of dollars PPP loan and forgiveness. And I said, okay, in your incurred cost proposal, you're prepared to, you have your PPP forgiveness application, and you're going to apply those credits, in compliance with FAR 31201-5. You're going to apply those credits in line with the treatment of the costs on your PPP forgiveness application. And what's important, and here's one of the issues with the PPP forgiveness in particular. The PPP forgiveness, as many of you know, eligible expenses for forgiveness, there's a list of 7 or 8 items. Payroll and related expenses for health insurance, retirement, things like rent, utilities, certain PPE expenses, right, are all eligible expenses. Well, what we're finding is that many companies are only using payroll to qualify for forgiveness. That's the only eligible expense they're submitting. Payroll is the #1 expense. It's the largest. It's the easiest to justify. And for many companies, right, they have more than enough payroll, more than enough eligible expenses and payroll to qualify for PPP forgiveness. So it's easy, it's simple. And what we're finding is that a number of attorneys, accountants, and other consultants out there are telling clients, yes, do that. And I would say generally I'm in agreement with that approach, except for government contractors. right? And so that's where the hiccup is for the PPP forgiveness. DCAA has made very clear, and quite honestly, they didn't even have to make this clarification because it's already written this way in the FAR with the credits, but they said they put out a separate document and they made clear, whatever is on your PPP forgiveness application. So for example, if your PPP forgiveness application says that we got forgiveness based solely on labor, then the credits that you apply on the incurred cost proposal and calculating your indirect rates need to go to labor. So back to my conversation with this potential client, they said, no, that's not what we were told. And I said, what were you told? And they said, well, we were told that for the incurred cost proposal, we could apply the dollar amount of the PPP forgiveness credit to any of the otherwise eligible expenses, meaning they thought, hey, we didn't claim rent and utilities as an example in our PPP forgiveness, but it was an eligible expense. We did have those expenses and we'll just apply some of the dollars to those expenses on the incurred cost proposal. And the answer to that is no, no, no. Again, whatever the format of the credit was, or I should say the forgiveness was, is the way the credit needs to be applied in the incurred cost proposal. We know, again, DCA has already made clear in an MRD audit guidance, telling auditors, when you interact with contractors, ask them and get evidence of their COVID-19 participation, whether it was PPP or any of the others, right? The auditors are going to ask for it. They're going to get that information. And guess what? When they look at your incurred cost proposal, if you got the employee retention credit, which is a tax credit against FICA, then they're going to expect to see a credit against FICA expense in your fringe pool, right? That's what they're going to be looking for in those kinds of things. So just be very, very careful with that. You're going to have a lot of documentation. This is going to be that supporting documentation that goes into your proposal. And more importantly, again, but just back to the ICP itself for both unallowable costs and the COVID-19 relief, there is that adjustments column, right? So if you're filling out Schedule B for G&A as an example, there is, right, you put in your account number, your description, your claimed amount, and then, right, there was an adjustments column, or I'm sorry, your GL amount, then the adjustments column, and then your claimed amount, right? So you're going to put an adjustment in there. You're going to back out the PPP forgiveness or the other credit. You're going to put a little indicator for the note, right? This is note 1, 2, 3, whatever that is. At the bottom of that schedule, you'll put at least a summary and say, this was PPP forgiveness. And I can tell you again, you know, if it's an unallowable cost, you can just put, you know, 1 and at the bottom put 1 unallowable costs. And generally, you're not going to get any questions because they're okay with that. We know what unallowable costs are. But I can pretty much tell you if you've got if you've got any of these COVID-19, you know, I would put, you know, number 2 down at the bottom. I would say number 2 is PPP forgiveness. And again, have that backup and submit it because they're going to ask for that kind of information. All right, let's talk for a few minutes about using templates. And this is my always my caution. Whether you go to DCA's website and download their template, whether you download our template from our website, maybe you've got your own template, maybe there's some other templates out there I don't know about. Keep in mind, it is just that. It is a template, okay? Meaning that you need to modify it for your business. Our template, for example, is built with 3 overhead pools. If you only had 2, you could still use the template. You just won't populate anything in the overhead 3 pool and it's fine. The calculations will all work. You won't have any issues. You know, if you have a material and subcontract handling pool, we're going to need to make an adjustment to the template because that template is not built for that. Wouldn't take me very long to do it, but we would need to fix the template, or you would need to fix the template. Again, the G&A in our template is set up for total cost input, or TCI. That's the most common. That's what almost all of our clients do. So it just made sense, right? Have a template that's built on TCI. If your G&A is value added, then the template is going to need to be adjusted. Make sure that you check formulas. I can tell you, I spent countless hours going through our template. I'm very confident in what's in there and the way I built the formulas and the tables, but I am human. So it's a possibility there's something broken in there. The other thing is that when you're using a template and you insert rows and do stuff, right? If you're copying formulas down, you know, you may copy a formula wrong. You may accidentally be in a field and hit the delete button and not realize that you deleted a formula somewhere. So, you know, do some spot. I tell people you don't have to check every row and every formula, but obviously do some spot checks and do some cross-examination between and among your schedules, because that will be an indicator that, you know, something isn't working correctly. I covered some of this in my Excel tips and tricks last month, but use things like named ranges and tables. Makes it a lot easier to validate your formulas, but it also helps to ensure, I won't say that it's completely foolproof, but it does improve the accuracy of your formulas and data, especially tables, because you can pull in total information, subtotal information. You can do all kinds of sum ifs and other stuff from tables. Make sure you watch for hidden rows and columns. I've removed all of that from our template. I don't like hidden rows and columns. I know why people use it. I can tell you, if you download the DCAA version of the template, you're going to find a lot of hidden rows and columns. Part of the reason they do it is that they build it in such a way that if you insert a row, then it doesn't break formulas, or you insert a column, it doesn't break a formula. Some people also use hidden rows and formulas because they'll put the formula or a piece of the formula in one of those hidden rows, and by hiding it, it's not that they're trying to hide it from you, they're just trying to keep it from being accidentally modified, right? So if I put some information relevant to the formula in a hidden row, then I hide that row, then you're not likely to go in there, right, and delete something that could affect the formula. The problem is in using, and I've got to pick on DCA, but I find it in other Excel files that I work with people, they use hidden rows and formulas, they put stuff in there, I find problems, and I'm like, what's going on? This doesn't jive, you know, this formula doesn't work. And then I start finding these hidden rows and formulas, and I find that there's errors in the information in the hidden rows and formulas. So just be very careful with that. Jenny, a polling question for us, please.
This is our 6th polling question today. Which is considered an ICP supporting document? A, year-end payroll summary, B, payroll journal entries, C, prior year's ICPs, or D, all the above? And Robert, while they're completing that polling question, we did have a question come in during your topic of COVID. Do you have that guidance that the loan paperwork must match the adjustments in writing that you could share?
I do. It's actually, so a couple of things. I would tell you, it's on our website. If you go to our website and go to the blog, there's actually a couple of blog posts out there on the PPP. One of the recent ones is an FAQ on the PPP, but there was a blog post from back in roughly February timeframe, a very lengthy blog post on PPP. At the bottom of that blog post, there's a link. But also what we can do is make sure that we put that, I'll get that link and we'll send it out as a follow-up email. Or if you just send me an email to support@leftbrainpro.com, I can get that to you or answer some other questions around this as well. But again, it's on our website. Go to the blog, look for the PPP. There's a lengthy post out there on PPP forgiveness. And at the bottom, there are a few links in there, and one of them is for the DCAA guidance.
I'm going to go ahead and close out that poll now.
All right, and the answer here is D, Delta. Remember, we were talking about the incurred cost proposal supporting documents. It was all of those things: the year-end payroll summary, the payroll journal entries, and the prior year ICPs. All right, let's get into some more tips and tricks for the ICP, and then we can move on to our open Q&A session. We've got some great questions, so please keep adding them to the Q&A, and we'll try to get through as many as we can. Part of my guidance is add tabs into your Excel file for the trial balance and other table formatted data. So a great thing to do, create a tab for your trial balance, put it in there, actually make it a table. When you put it in there, then use your name, that automatically turns it into named ranges within the table. So then when you do that, when you build formulas elsewhere, you can use like the XLOOKUP and some other functionality. You can pull that data over into your other schedules as appropriate. And then the nice thing is, let's say, and we find this, right? You're working through the incurred cost proposal, and all of a sudden you're like, oh, this got coded wrong. You know, this journal entry is wrong. We need to do a journal entry to fix this now, right? And get stuff into the right buckets. Well, what does that mean? That means now I'm going to end up with a new trial balance. So if I got a new trial balance and then I got to, oh, wait a minute, I've already done half the incurred cost proposal. Now I'm going to have to go back and double check all my stuff to see what accounts changed, make sure I get the, the dollars in the right spots. No, the nice thing again, put one tab for your trial balance, turn it into a table, use formulas to reference that single table. Then if you have to make an update to the trial balance for some reason, right? Because whether maybe you find journal entries, maybe it's something that, somebody else is working on the tax return stuff and part of that, generates a journal entry that needs to be fixed or an audit. Then all you got to do is update the one tab. And because you got formulas referencing the one tab, then the data automatically flows through to all the other tabs as needed. Insert screenshots and documents, but be careful of your file size. So for example, sometimes we have some clients, they have some little quirks in what they do and we have to make adjustments, right? Remember, so we got the adjustment column. When you make an adjustment, you're gonna put in, is this adjustment 1 or 2 or 3 or whichever of this schedule in the notes column, and down below you'll put a note. Sometimes all you need is just a little screenshot. You just need something to say, this is where this number came from. And so it's something that could go, oh, okay, sufficient, that's all I need. Easy to do that, easy to insert those kinds of screenshots. Documents can be helpful to insert into an Excel file, but what I will tell you is your Excel file can get really, really big really quickly. So just be careful of that. If it's like a one-page document, it's probably okay. If it's a multi-page document, you're probably just going to want to have a separate folder, right? So you should have a folder for your final submission with your Excel file, your signed schedule in, and all of your supporting documents that you're going to submit with it. Make sure that you clearly mark and identify all of your reference material, especially those items that are submitted as a separate file. For example, back to my PPP forgiveness. If I make an adjustment, I make a note, I come down, I say PPP forgiveness, and I would say, see PPP forgiveness application dated, September 30th, 2020. Make sure then that, the PDF file you submit separately says PPP forgiveness application September 30th, 2020. Make it very clear, right, which document somebody needs to open. Further, if it's a lengthy document or there's a very specific piece of information within that document, in the document itself, maybe you highlight it or you put a red box around it or something so that it stands out. If there's a page number or something again that can help identify, you might say see page 10 of such and such document. Make it easy for somebody who's either helping you prepare or review your file, or certainly make it easy for the auditors after the fact when they are going through the file. Keep a separate set of notes and working papers that are documenting your assumptions and decisions, right? When we go through this stuff, it's just like preparing financial statements. It's like working on anything else as an accountant, right? Sometimes we're making decisions as we go along. We're making certain assumptions. Document that, right? Because it's going to be months, sometimes years later by the time somebody else comes back to this. It's not uncommon. Many of you know this with the incurred cost proposal. It's not uncommon to at least be several months. And again, we've seen sometimes years later that incurred cost proposals get audited. How many of you can remember last month what you did, let alone last year or 2 years ago? These working papers will keep everybody sane. Remember, we talked about some of the schedules are optional, but they will be required during an audit. I can tell you there's another big firm out there that tells people don't complete them and don't submit them until you're asked. Not my approach. My approach is best go ahead and complete them now, but just know that they are technically optional. All right, some tools out there specifically to help you with the incurred cost proposal. Again, I've talked about this, contract lifecycle management software. Just make sure when you do some searches that you put in government contract lifecycle management because you want to get a tool that is designed for government contractors. This is going to help you track your contracts, subcontracts, modifications. These also go into tracking the clauses, milestones, reporting. The clauses aspect of this is really cool because again, one of the things that often comes up from a contract management perspective is somebody will say, hey, and I've been the contract manager sitting at my desk and somebody shows up and says, hey, do you know if this clause is in our contract? And I'm like, I don't know, I can look, right? So we look and we go, oh yeah, it's in there. And they're like, well, we just learned this particular clause is now a problem for us. I'm like, okay. Well, what does that also mean? Well, it means that I've got a problem with this particular contract, but it means I likely have a problem with other contracts, right? If I've got multiple contracts, there's a really good chance that same clause is in other contracts. If I've got a good contract management tool, I can then do a search and say, show me all contracts with this clause, and boom, I've got a list, right? And it's easy to narrow down and identify those items. The contract lifecycle management tool should generate a contract brief for you, something that you'll use elsewhere in contract management, but you need it for the incurred cost proposal. One of the other tools is, and this is for like our small, it doesn't have to be a small business, but many small businesses are using QuickBooks. If you're using QuickBooks Desktop, it's important to note that ICAT only works with desktop version right now. They are working on an online version. We're hoping they're able to launch that soon. But it does calculate indirect rates, so it pulls in the information live. There's no uploading, downloading. A little bit of configuration on the front end, but I'll tell you, very simple to set up and use, very easy to use. It calculates indirect rates. It does job costing. It has a budgeting tool, and it has incurred cost reports. So if you've got everything in QuickBooks, and then when you open ICAT, as you add a new contract, you have to fill in some additional data on the ICAT side that QuickBooks doesn't track, right? QuickBooks doesn't have some of the fields to be able to track, like prime contract numbers and contract type, but you enter that information into the ICAT side because it's reading the data live from your QuickBooks file. Then you literally, with a couple of clicks of a button, boom, you've got incurred cost reports and a bunch of other reports out of there. If you're on QuickBooks Desktop and you're a government contractor and you're on this webinar with us and you want more information, please contact us. Happy to do a quick demo, 15 minutes. I guarantee you'll knock your socks off when you see how simple and easy it is to use and the information that it does provide to you. There are other accounting software out there that's designed for government contractors. The functionality is similar among them. There are obviously some difference, but most all of them are going to give you information that's going to help you in preparing the incurred cost proposal. They're going to give you reports that make it easy to get the information. Uninet is one, Procast, Simpac, and a tool called GovCon 365, which is built on Microsoft's 365. It's the old Dynamics Nav, for those of you who are familiar with Dynamics Nav. All right, Jenny, I think this is our last polling question today.
It is. Why would you hire someone to help prepare your incurred cost proposal? A, we don't have the time. B, we don't have the time or bandwidth. C, it's complicated and we don't have the expertise. Or D, all the above. Give just another second on this question, and then we have quite a few questions that have come in. I'll go ahead and close this out and share the results.
All right, obviously not a right or wrong answer here, but it is nice to see that 70% of you see the value in hiring somebody else to help prepare, right? Did you recognize there are lots of reasons to get somebody else involved, and we hope you will do that. All right, as Jenny gets ready to ask me some questions, I did want to get a couple more slides on the screen. We did mention that there is a summit, so we are putting together a GovCon Accounting Summit. This is dedicated to government contract accounting, so whether you work inside a government contractor, if you're a CPA at a firm, whether you're a CPA or not, doesn't really matter. But if you're interested in some aspect of government contract accounting, all the things that we do here in these webinars on the Incorsa platform, we are doing a summit this summer. You can see the website there, govconacct.com. We have a call for presentations and sponsors is open right now. The main registration will open May 3rd. And also put our contact info on here. Again, we'll try to get through all your questions. If something else comes up, something I mentioned maybe later and you want to know more, just send us an email, support@leftbrainpro.com. And with that, Jenny, I'll take our first question, please.
Our first question, business development is a G&A cost. Do I treat it like I treat B&P and IRAD, that is like a separate project?
No, so business development is just a regular G&A cost, right? So now you might have a separate account for it, right? You might want to track business development labor separate from accounting labor, as an example, within the G&A pool. You could have a business development project. I will tell you that larger, more complex organizations will oftentimes have multiple G&A projects. Obviously, that's more to administer, but business development itself, whether you incorporate it in a single project, whether it has its separate project, is just a regular G&A expense. The IRAD and B&P are the only ones that are treated differently.
Our next question, are payroll fees and payroll taxes included in the calculation of direct labor on the overhead schedule?
No. So again, when we talk about labor, we're talking strictly labor, the actual dollars to pay the employee. So that does not include any payroll taxes or payroll processing fees. Remember that payroll taxes are a fringe expense, and payroll processing fees we typically treat as a G&A expense. You can have a separate account for them. Some people dump it into bank processing fees. But they are distinctly separate from payroll. And I will pause for a moment and just say that it's an interesting question, and it's one that we find a lot of issues with very small companies out there. The payroll summary reports that many of the payroll providers give, at the end of the month. So the payroll processors, they've got a report that they provide. We find that payroll summary report is often very confusing, and people end up coding the stuff incorrectly on their journal entries. So if you're having some issues with that, contact us. But yes, the payroll taxes are separate and the payroll processing fees are separate.
Next question, should PPP credit be applied with 2021 ICS when the loan forgiveness is approved?
So yes, you would. So let's say, for example, I'm going to answer that question in a couple of ways. So we're now right in April of 2021, and maybe you got PPP forgiveness in 2020. But let's say you got a PPP loan in 2020. If you applied for forgiveness and you have received that forgiveness by the time you're preparing the incurred cost proposal for 2020, then you should apply those credits accordingly. If it's now April of 2021 and maybe you haven't yet applied for forgiveness for 20, or you have not received yet forgiveness for 20, then you can't claim the credits yet. You don't want to do that. We would claim those credits either in 2021, or you could potentially file an amended 2020. I would hope that if you're a calendar year payer, and whatever the timing is of your application and what's going on, I would say that you have a couple of options. One, you could request an extension to file. Again, if you're a calendar year pay or a calendar year company for your fiscal year, then your incurred cost proposal is due June 30th. Maybe you submitted let's say you submitted your forgiveness application in March. Maybe you're still waiting. Maybe you expect to get it, right? It's highly likely you're going to get it, but you haven't received it. You might request, as you get closer to June 30th, you might request an extension. That way you can, kind of sum it all up and be done for 2020. I hope that gives you some good guidance there.
This is another question about the PPP. Does DCAA guidance have more information as to when those rate adjustments must be made? FHWA seems to be leaving the application up to the states, but some states prefer the matching principle and others prefer to wait until the forgiveness is completed.
Yeah, we are seeing that difference, and certainly when we talk about the state stuff here, right, part of what's happening is for government contractors, you have some who are participating, for example, in DOT or other work at the state level, and they're following AASHTO guidelines in general, but AASHTO hasn't spoken up specifically about the proper treatment of these costs. part of my, and this is one of those that I've got a little bit of a waffle answer, unfortunately, because we do have this discrepancy between the federal and the state treatments. I would say that if you are a government contractor and you're only doing state level stuff, then I would say you need to follow your home state guidance. And one of the other things that's problematic is that we don't even have consistency among the states. So it's not just that there's a state federal difference, there's also a difference among the states in how they're handling this. So you need to follow your home state if you are only a state contractor, or I would say primarily a state contractor. If, however, you are a federal contractor, or federal contracts or your primary source, and maybe you do a little bit of state work, then I would say follow the federal. And as politely as I can say this, the states are just going to have to get on board and follow, right? Because you can't calculate rates two different ways for the same company for the same fiscal year. So if you're reporting them one way for the federal, then to me, the states are simply going to have to accept that. Again, the timing of how you report that at the federal level is it's a little fluid, because if you get my argument is if you get your forgiveness for calendar year 2020 in time to incorporate that information into your incurred cost proposal when it's due by June 30th, then I say, even though the cash is received in 2021, I would credit the stuff on 20 so that the rates are correct, right? We received the money for that time period. To me, we should credit there. If you don't have it, right, then you're going to have to file 2020 as it is, and then either, again, I would say explore the possibility of filing an amended incurred cost proposal, though that has its own issues. It opens up a new set of risks, not good or bad, but it just opens up a new set of risks, just like filing an amended tax return. And then, maybe you end up having to claim all those credits in 2021. It's really down to the timing of when you apply for forgiveness and when that forgiveness is actually received.
Robert, we have two more quick questions. This one is another one on PPP. I have PPP and I have not included PPP costs in my pools. Is this incorrect?
So I'm going to interpret that to say that you're saying you did not claim the expense already in the pool. So what you need to do is you need to claim the full expense, and what I'm going to say is as it's listed on your general ledger. So let me pause there and say, this is also our guidance for government contractors who receive PPP forgiveness. Do not apply those credits to the general ledger if you are a government contractor, okay? So if you get PPP, let's say you get PPP forgiveness, and I'm going to use a simple approach, and it's all for labor. Don't recommend that, but that's what you did. You got all labor. On your general ledger, have an other income account, right, for this PPP forgiveness reflected as an other income, and then do not make any adjustments to the actual labor accounts. Any adjustments need to be made on the incurred cost proposal. The other reason that I would tell you to take this approach is that we know some states and some localities, right? Because remember, some of us actually pay business income taxes at a city level. For example, in Ohio, we do that. Some states and some cities are treating PPP forgiveness and some of the other COVID-19 relief differently than the federal government is. That's also one of the reasons that many of you received guidance to file an extension for 2020, right? Because some of the states are still up in the air about what they're doing. Again, my guidance here, back to the core question, your PPP forgiveness, create an other income account, record it there. Do not make adjustments in the general ledger to the expenses that you use to claim forgiveness. Make those adjustments only on the incurred cost proposal.
One more quick question before we wrap it up for today. How or where can we reference your presentation on unallowable costs? Do you talk about the impact of unallowable costs on indirect rates?
I do, and actually that's a great question. There are some real, it's another one of those unique things that is problematic in the calculation of indirect rates. We have a copy of the webinar on our website, and we'll have to ask Liz if she has that available through the in-course platform.
We can go ahead and follow up with the attendee with that registration link.
Okay.
I think that's it for today.
Wonderful. Well, thank you so much, Robert and Jenny. Thanks everyone for joining us. We hope that you'll join us next month, and the registration link for next month's presentation will be made available to you in the follow-up email that will go out this afternoon. So thanks for your feedback. Seeing Helen and Shimla saying thank you so much for providing guidance and calculations, and excellent. So thank you. We'll look forward to having everyone back with us again soon. Until then, take care.
Thank you. Have a good day.